Hello everyone, welcome back to Unday Radar Talks. NVIDIA stock surged 8% on Wednesday. The current price of the stock has reached the level of $117, and it is significantly above the 5-day moving average, indicating that the stock performed very strongly on Wednesday because a lot of capital flowed into the stock that day. Of course, this also means that a lot of capital exited the market. The optimistic thing is that the capital inflow on that day was relatively evenly distributed, which reflects that a lot of long capital has intervened in the stock in the past 5 trading days, resulting in a general bullish market for the stock, and more funds have flowed into the stock. But the question is, how will the stock perform next? The trading volume of the stock on Wednesday was significantly enlarged. Yes, this is a worrying point because it is very likely that capital will use the stock price to pull up and sell a lot of chips, but this is only one possibility because the stock has just stood at the level of $117. So it seems that it is not so easy for the bears to drag the stock price down at this position. However, the bulls will indeed face greater resistance if they continue to push up the stock price. Not only will the capital that has made profits bring selling pressure to the stock price, but the locked-in capital above the current price may also be sold frantically again. In any case, the bulls will continue to challenge the bears. Whether they succeed or not is another matter. Let's take a look at the 15-minute chart of the stock. We can see that the stock price fell sharply on September 3rd with a large trading volume, because the technology stocks were sold by investors on that day, resulting in a large amount of capital outflow from the market on that day. The stock began to rebound at the $100 level on September 6th. The reason why the stock price stopped falling at this position was that a large amount of long capital entered the market at the same level in early August, so it gave the stock price a strong support, and the trading volume on that day was also significantly enlarged, which is a positive signal, indicating that a large amount of long capital returned to the stock on that day. The stock pulled back in the morning trading on September 11th, but took off again. The stock price continued to rise during the trading session, accompanied by a large trading volume. There were also large orders at the last moment of the closing, but the trading volume distribution during the regular trading period was relatively even, which reflects that capital did not choose to sell in large quantities at high levels, so this is regarded as a positive signal. Let's take a look at the capital flow data of the stock. We can see that during the low-level consolidation stage, that is, from September 4th to 10th, there were 4 trading days with net capital inflows, and the cumulative net inflow amount was as high as $2 billion. The net capital outflow amount of the stock on September 6th was $1 billion, but as mentioned earlier, this may be a reverse entry capital, so the cumulative net inflow amount of the stock during the low-level consolidation stage may be as high as $3 billion. The net capital inflow amount of the stock on September 11th was $1.8 billion. Even if this is a reverse outflow of capital, it is far lower than the $3 billion mentioned above, indicating that the capital that drove the stock price rebound did not exit the market in large quantities. Although such a comparison may be biased, it at least reflects that the current market pricing power of the stock is still in the hands of bulls, and a large amount of capital is still in the market. Let's take a look at the market position distribution data of the stock. We can see that after this wave of decline, the stock price has accumulated a large number of positions between $109 and $102, which is the basis for the stock price rebound. The stock also has a large number of positions at the level of $114, but the current stock price has broken through this position, which reflects that the selling of locked-in capital at this level has not caused the stock price to fall. It seems that the bulls have digested these chips and maintained the stock price at a high level, so the current stock price is still in an upward trend. So will the stock rise further next? I think it is possible. Although there are also a large number of positions distributed above the current price of the stock, if the general bullish sentiment in the market is high, it is also possible for the stock price to break through the $122 position, and the current price is only about 4.2% away from this position. So will the stock return to the $128 level? This is also possible. The current price is 9% away from this position, the gap between the two profit margins. But there is also a worrying point, that is, when the stock price hits the $122 level, the capital that entered the market below $109 has already made a profit of more than 10%. So the stock price will face greater selling pressure if it continues to rise, which may lead to a trend reversal at any time, so pay attention to changes in trading volume. Okay, guys, this is my price prediction for NVIDIA stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for hot stocks later. See you in the next video.